Comparing gilt funds and bank fixed deposits, making the right investment choice. When it comes to investing your hard-earned money, choosing between gilt funds and bank fixed deposits can be a daunting task. With the current 10-year Government of India bond yield around 7% and banks offering similar interest rates for 10-year FD, making the right decision becomes even more crucial. In this video, we will explore the risks associated with gilt funds and bank FDs to help you make an informed investment choice. Understanding the risks. Let's start by understanding the risks involved in both gilt funds and bank fixed deposits. Gilt funds primarily invest around 80% of their portfolio in Government of India bonds, while the remaining 20% is managed by the fund manager. As an investor, it's important to know where this 20% is being invested. In the case of gilt funds and gilt constant maturity funds, which hold 10-year maturing government bonds, if the fund manager invests the entire portfolio in gilts, the probability of default is almost negligible. This is because a default by the Government of India would have serious implications for the banking system as well. Bank fixed deposits, on the other hand, offer a maximum security of 5 lakh rupees under the Deposit Insurance and Credit Guarantee Scheme. Additionally, the Reserve Bank of India publishes an annual list of domestic systemically important banks, DSIBs, or institutions considered too big to fail. Banks such as State Bank of India, HDFC Bank, and ICICI Bank are included in this list. Post office deposits also provide sovereign guarantees, but they have a maximum tenure of 5 years, limiting long-term investment options. Now, let's talk about the volatility risk associated with gilt funds and bank FDs. Bank fixed deposits offer stability as they guarantee the return of the principal amount along with fixed interest. However, gilt funds, especially gilt constant maturity funds, can be highly volatile due to the tenure of the bonds they hold. While the 10-year government security yield, GSECYTM, may be 7%, this yield is realized only if the investment is held until maturity. During the 10-year investment period, the value of gilt funds may fluctuate based on the interest rate cycle. Unlike holding a specific maturity bond, gilt funds do not have a fixed maturity date. Even after 9 years of the investment period, the fund may still hold bonds with maturities exceeding 10 years. To manage volatility risks, it's advisable to gradually shift from gilt funds to short-term funds as your investment goal nears. Failing to do so may result in negative returns if there's a significant change in the interest rate cycle when you need the funds. Now, let's discuss the taxation aspect of investing in debt funds and bank fixed deposits. Starting from April 1, 2023, debt funds are now taxed similarly to bank fixed deposits. If you missed our previous video on debt mutual funds taxation from April 1, 2023, I recommend checking it out for a more detailed explanation. However, there's an advantage when it comes to tax payments with debt funds. Tax payments are due only upon withdrawal, unlike bank fixed deposits, which require yearly tax payments or may have tax deducted at source, TDS. This means that with debt funds, you have the flexibility to defer your tax payments until you actually withdraw the funds. On the other hand, bank fixed deposits often require you to pay taxes on the interest earned each year or have taxes deducted at source. Considering the tax treatment, many investors prefer debt funds over bank fixed deposits, even though the tax rates may be the same for both. It's important to evaluate your own financial situation and consult with a tax advisor to determine which option suits your needs and goals better. That concludes our discussion of gilt funds and bank fixed deposits. Remember to stay informed and make wise investment decisions. If you found this video helpful, don't forget to subscribe to our channel for more informative content. And as always, if you have any questions, feel free to leave them in the comments section below. Thanks for watching.